Markets are eyeing key earnings today between Tesla and Microsoft following the FOMC meeting tonight, where AI sentiment continues to build back into the market, lifting Nasdaq and the S&P higher near their record highs, while the Dow continues to lag near the 49,000 mark. Now, analyzing the performance of the US indices ahead of the FOMC and the earnings today, we have the S&P 500 challenging the 7,000 resistance before it can break out towards new all-time records. And we also have the Nasdaq eyeing the 26,300 mark before it can also confirm a breakout towards the 27,000 threshold. And we also have the Dow diverging away from these highs, lagging behind slightly below the 49,000 mark, keeping key levels and confirmations in focus as we have shifting geopolitical and policy headlines that are keeping safe havens in focus and lifting gold higher above the 5,200 mark. So analyzing the Tesla charts from a monthly time frame perspective, we can see a bullish continuation, inverted head and shoulders pattern extending on the charts between November 2021 all through September 2024, where we have the bullish breakout in place. So we had one rebound near the neckline of that formation, continuing all through higher highs, with the trend line connecting higher highs between April 2024 all through January 2026, maintaining an extended bullish bias on the charts. Now, we lately had an extended consolidation below the records near the 500 mark due to the rising competition from the BYD and the overall demand concerns over the electrical vehicle adoption rates as well. Now, a clean hold above the 500 mark or the 490 mark is expected to extend the trend toward the 560 and the 660 mark, which can be derived using the Fibonacci extension tool between the wave of the low of April 2024, the high of December 2024, all the way through the low of April 2025, where we currently have the 0.786 Fibonacci extension aligned with the latest highs near the 490 to the 500 zone, and the 100% extension in the 1272 aligned with the previously mentioned levels between 560 and the 650 respectively. Now, from the downside, should we have a clean hold below the 400 to the 390 barrier, we might have the bias shifting towards the bear side, potentially extending drawdowns all the way down towards the 350 level first and the 300 mark next for potential dip buying opportunities should we have an overall sentiment drawdown in the markets or earnings missing expectations. Analyzing the chart of Microsoft from a weekly time frame perspective, we can see a strong bullish rebound in play from the lows of January 2026, in line with the rising AI and Copilot adoption across global institutions. Now, that bullish rebound is currently approaching the key neckline of a double top pattern that extended on the charts between July 2025 and October 2025, preceding the overall or the latest drop seen on the Microsoft chart. Now, this key neckline is between the 490 to the 500 mark, and the clean hold above this mark is expected to extend gains back towards the all-time records near the 520 and the 550 marks before extending further. Now, should sentiment turn south and should we have possible miss in expectations, key support levels to watch are between the 460 mark, which can open the way back towards its January 2026 lows near the 440 mark and further down towards the 420 mark for potential dip buying opportunities.